Hello, this is a tradesight U.S. stock market recap or trade recap from some of our trade calls for Wednesday, August 5th, 2015. I had posted a video over the weekend talking about what to expect for August. August is an interesting month. To me, it's a great trading month because you get a lot of really clean moves, clean technical moves that do exactly what you would think, and you don't have to question it or fight it. A lot of it is because the bigger players are gone, and some of those bigger players include people who try to stop the momentum moves the rest of the year. And obviously, momentum moves are where the easiest money is made. And with them out of play, some of these trades will, when you find proper setups, will just work so smooth. All you have to do is stick with them and let them run. So let's do a little bit of setup work for the session as we were coming in. Here's the daily chart of GPRE. It was our number one pick. We were looking to go short under the 2071 area. You've got a nice inverted cup formation here on the daily chart that goes all the way back to January. By the way, you'll notice the low candle in January was a 13 buy signal with our seeker tool. So once again, as always, the seeker nails it perfectly and gets you a buy signal that leads to a bounce for a couple months. And then, and again, on a daily time frame, that's a relatively good move. And then we roll over here, and now you've got this great inverted cup formation. So we'll come back to this one in a minute, but just to show you, this was our top pick, and we'll see what that ended up playing out as when we get a little bit lower or a little bit further into this presentation. So let's talk for a minute about the market itself, what it did today, and what type of opportunities it might have provided us. So, trading is obviously about patience. We teach that in all of our program. Anybody who's running around firing at everything is probably not going to find success in the markets. There's certain things you're going to look for, and if you get them, you get them, and if you don't trade. That's how it works. So what we saw today at first was a little disturbing. This here's the first two 5-minute candles on the broad market. This is the ES front month futures contract. Big gap up over about 15 points, 14 points. We were closed the prior day on Tuesday near the lows. This took us all the way across Tuesday's range and gapped over all of that for a new high opening, almost near R2. We were at the R2 level on the pivot series almost immediately here. When we get big gaps, now remember, 80% of gaps fill the same day, 95% fill within a week. And when we get big gaps in the market, then they become a little less likely to fill. And one of the measurements we use for that is the purple line that you see here at the just above below the 2090 level. That's what we call the upper pressure threshold. And when you gap above that level, it decreases the odds of filling the gap. So it goes from 80% down to more like 40% once you gap over that level. But I will point out that doesn't mean that we can't pull back. I mean, there's a lot of room between where you see the opening trading here and the purple line. The key is that the purple line should technically become support if you do pull back and not let you go back in to fill the gap. So before we get into any individual stock plays for the session, let's use bar replay mode here, and let's just go forward candle by candle and see how the day played out. So initially, we pushed even higher. Took us through about the first hour just inching up. Now this is only about an 8-point range on the ES, and we established the high in the morning right there. And then we pulled back over here. Didn't do much, and now you're about to come into lunchtime. We start to roll down. Now we're approaching the lows of the session. Now keep in mind, obviously as you start to pick up speed to the downside, then you should be looking for stocks that have nice patterns that might either trigger a nice pattern short or trigger an intraday pattern into the gaps for their gap fills. That's what you'd be looking for. And especially then if the futures really crack the lows, that would be interesting. And as you can see here, right as we enter, this is noon Eastern time, right as we enter lunch, we're testing the lows. We pause, and then boom, you often get, it's a bear flag, you often get 3 candle bear flags, and from there we break down. So we proceed lower, we get down here and test the red line. That's the upper break level, that's a GAN level, really important level. Finally break that, we start playing with the value areas. That's the shaded area. I will point out, look how close we are at this point to the purple line. So we've come down very near this pressure threshold, but keeping in mind that the odds of cracking that and actually filling the gap are much smaller since you gapped way over it. And as the rest of the day plays out, now we come back from lunch, find support at that pressure threshold. We come into the last 2 hours. We actually bounce a little, which is not surprising. You look at the VWAP as a potential target. Almost got to the VWAP. That's that other purple line. Couldn't quite get there. And then just to show you the close of the day, okay, came back and closed kind of near the lows of the day. So gap up, hold initially. We don't really like the gap and go sessions. The whole idea where you're gapping and everything's gapping up and leaving gaps behind when we know that 80% of gaps fill the same day, but we're supposed to keep playing the long side. Those can be the least interesting days in the market. But if you do roll over and at least head down into the gap, that gives you some better trading opportunities typically. The other thing I'm going to throw on this chart real quick is our market directional tool. And the reason that I'm doing that is because it will give you the key point in the market, and that is you can see the point as we add these three green and red lines. The point where the market just before lunch by about 4 bars broke under the midpoint of the day. It was a flat green line at the time. You've got the short-term moving average above it, and the lower green line is the opening level. That's the first print of the day. So using our market directional tool, once we get below 2 of those 3 lines, that means market direction's gone red. So that gives you the point where you should really start looking on the short side, even though you haven't broken the lows yet and broken into the gap. Okay, so maybe 20 minutes before noon is that point of entry that would have interested us from that perspective. So what does the day look like from the market's perspective? Let's just recap it. A big gap up and an attempt to go higher. That's not very interesting. Wouldn't get me involved in too many trades that way. Those are higher risk trades. But once market direction goes red ahead of lunch, there's always that possibility. Now we've got market momentum to the downside. Can we crack the lows? Can we head back towards the gap fill? And that really gives market direction red, where you'd be looking for either short entries or gap fill short entries. And you may not expect the market to go back and fill the gap. Matter of fact, it found support about a point above the purple pressure threshold, as we would have expected. But at least you've got momentum to the downside, so now you can go out and look at some other plays. All right, so that's the short version of what the day provided us with. Now let's go take a look at some of these individual stocks and see what we actually got. So here's that GPRE. And again, when I mark off the 2071 area, that was the daily chart breakdown, look at this. That's the blue line. It cracks that low, and it just kept going. It didn't make a huge move, maybe 50 cents on a $20 stock. Okay, but, at the end of the day, that's a clean move. And you'll notice that when the trigger happened, right, and it was over lunch, we didn't get a lot of fight back. We didn't get a bounce and a bunch of games being played around that level. It was just a clean move right there. Another one that we looked at was the GILD. Okay, and again, you'll notice that this one had, if you look at from the gap right here, look at this blue line. That was our short entry that we were commenting on. And I'm going to go ahead and clean up this chart a bit because I've got a few extra studies that you really don't need here at the moment to hopefully get rid of those and make it easier to see what's going on. Get the seeker off, and there we go. So now we're just looking pure at the chart pattern. Look at the gap up on GILD and the sideways action, and that's pure basing action. So once that market direction rolls over and the gaps are below, this should be a gap fill play on the individual stock. And a lot of times there'll be a little battle when you first trigger, but not here. We get a clean trigger. We move straight down from the 119.50 and change level all the way to the 118.80 and change level for the gap fill, and lower even. So a very clean move just to go back right to that level and fill the gap. Another one we looked at today that was highly successful for us was the Goldman Sachs. We were looking at this one. We had in the messenger for our customers to short this one under this level right here. And again, gap up, sideways action, inverted cup type of formation. The market direction goes red about 20 minutes ahead of lunch. About 10 minutes ahead of lunch, this thing cracks the lows. Is there a battle there at that point? Is there a struggle between people on both sides? No. It goes and does exactly what you would expect, which is that it goes back to the close of the prior day. That's the gap fill. That's right here, the lower blue line. It's a clean move from almost 207 to just below 205, more than a 2-point winner. Very clean and easy. And this is what we're talking about when we talk about August being a fairly straightforward month from this perspective, is the fact that a lot of these trades, when they trigger, they're not going to get a lot of wiggle room trying to shake you out. The pros are not there to do that right now. So take advantage of these moves while you can. Here's another one in LinkedIn that we shorted. This one went early. This one didn't even have market support, so I wasn't as heavy on it. But it still made a move, as you can see, and cracked the low of the prior day. See, this one was weak early on. It gapped up, very small amount, filled the gap early while the market was heading up, showed signs of weakness. So cracking the basing action and almost the head and shoulders formation over the last day or two gave us a move. And it was still a couple point move to the downside, ultimately went even lower. So again, I just want to stress for people, August should be very clean, straightforward trading. Just make sure you're waiting for the patterns. Make sure you're waiting for the types of trade setups that count. Look for breakouts and breakdowns out of nice construction. Look for gap fill plays, and make sure you've got market direction on your side before you use even more than I would say quarter size like we did on the Goldman and the GILD, but overall, and the GPRE. But overall, this was a very nice trading day, and I look forward to more of this in August. Doesn't have to be 5 days a week, won't be 5 days a week, but until we can get back to volume and get out of this range we've been stuck in, August should prove to have a couple of days a week that'll be very useful to your bottom line. Thanks for listening. This has been a TradeSight Trade Recap.